So we just 4 hours and 45 minutes away from the biggest FOMC meeting of our lives until the next FOMC meeting. And if I'm watching Bitcoin on the 1 hour chart, because that's where the volatility happens, you can see that Bitcoin is doing exactly what it does on the day of the FOMC meeting and exhibiting some kind of volatility, because we were 28,780 a couple of hours ago, but now we're back down at 28,265. And on the eve of this meeting, we have Elon Musk warning Powell not to raise rates. We have the Democrats warning Powell not to raise rates. But I wonder, is Powell going to raise rates? Right now, as it stands, if I look at what the market's telling me, the market's telling me that Powell is going to raise rates by 25 basis points, but also that it's going to be the last rate hike of this year. But there is a very small chance, as you can see, 14.9% chance that there's not going to be a rate hike tonight. So we are going to be live tonight. We're going to be with you right here, and I'm going to talk to you about what we're going to be doing live tonight. Also today, we're going to be talking about PEPE, because as you can see, PEPE's price is now down to 9.0,0000, you know what I mean, 9.5 from yesterday's highs of almost 16. And I think what's happening to PEPE is realizing that it's no longer a child. It is now maturing. It is now becoming an adult. And when you start to mature and you start to become a teenager or an adult, you start getting real world problems like perpetuals. And perpetuals are now affecting the price. So we're going to talk about that. And then we're going to talk about 𝗬𝗎, because 𝗬𝗎 is trading. I've got an account here with money ready to trade, but at $1.23, the only trade I'm taking is short, and you cannot short 𝗬𝗎 yet. So listen. We've got a big show ahead of us, lots of alpha. We're also going to learn how to trade the FOMC with an options trader. So it's going to be like a big show, lots of fun, lots of excitement. Get out of bed, guys. Let's do this.
Get the fuck out of bed, bitch. Go. Get up and get the guy go on. Time to wake up, bitch, get up. Get up, get up.
Wakey, rise and shine. How are you doing on this Wednesday? And you know what? Statistically, I want to show you something. Statistically, Wednesday is the best day to be trading. Wednesday is the green day. And if you look at Bitcoin's cumulative log returns by day of the week, Wednesday is the best day to be trading. So let me know how you're doing in the comments on this amazing Wednesday. And what I want you to do in the comments is let me know that you're present. If you're here in class, Alex Wells, if you're here, say present. Nit, if you're here, say present. Gabby the DJ, I don't even have to ask. I know you're present. Nomad, I know you're present. Josh, are you present?
Present.
James, are you present?
Yeah.
Ferdy, are you present?
Present.
Fred? Fred, again, not present. No one knows where he is today, but we'll find him. We'll find him before we get into the big alpha here today. All right, lots of alpha here today on this pre-FOMC show. The same pre-FOMC show that Elon Musk is warning Powell. If you raise rates, you're going to break the economy. The Democrats are warning Powell. If you raise rates, you're going to break small business. No one's talking about the fact that you're about to break the banks. So we're seeing one of the biggest banking collapses, even bigger, or maybe the same as 2008 when it was the big financial crisis. So we're going to be talking about that today. We're going to be trading 𝗬𝗎 live. We're going to be talking about PEPE. Got a whole lot of altcoin news for you. We should probably talk for a few minutes about what happened in Russia. There was an assassination attempt on Putin's lives with drones. So you can see that this time the new kind of warfare is actually like drone warfare. Watch this. So Russia's blaming Ukraine. Ukraine obviously saying they know nothing about it. You know, it's one of those, it's all very, very, very political. So we should probably spend 1 minute talking about what just happened in Russia. So I think we can agree. We've spent the 1 minute talking about in Russia. What I'm going to do is I'm going to close this window now because we don't need it anymore. We've spoken about Russia for the obligatory 1 minute. I mean, in a way, actually, I'm not going to say it because then if I say it, they're going to take the video off YouTube because I wanted to say that he maybe should have been killed. But no, I'm not going to say it. All right. Listen, if you're new to the channel, I got back yesterday. You guys notched us up another 1,000 subscribers. Let's see if we can do that again today. Subscribe. I'm going to be trading on this Wednesday. I'm going to be trading FOMC. I have a plan specifically around the 𝗕𝗬𝗕𝗏 competition because I'm not doing very well. The 𝗕𝗬𝗕𝗏, the ByBit competition, I'm not doing very well. I'm minus 20%. But I am going to make that money back today at the FOMC meeting. I'm going to be trading it. So join us live. 𝗕𝗐𝗕𝗏 and I are going to be live here on YouTube. At the same time, there is going to be a Twitter Spaces going on. We are going to be hosting a Twitter Spaces. If you haven't yet subscribed to our Twitter Spaces, go and subscribe to Twitter Spaces. It is pinned on my Twitter. It's my pinned tweet. Join us. Going to be Gareth Soloway's on, 𝗕𝗬𝗕𝗏𝗕𝗏's on, Mike McGlone, and other experts apparently. And other experts are going to be on. Lots of other experts are going to be on. What else? I think that's it. Let's get into what's going on with the show today. So, what do we know? It is the FOMC meeting, the biggest FOMC meeting of our lives. All eyes today are on Powell. We always say it's the biggest FOMC meeting of our lives, and then we like survive it, and then we get to the next FOMC meeting. But this one is quite big because the economy is taking a lot of strain. The banks are taking a lot of strain. Businesses are taking a lot of strain. And today, all eyes are actually on Powell to see what Powell actually lands up doing. Is he going to do what the market thinks he's going to do, which is actually raise rates by 25 basis points? And if he does raise rates by 25 basis points, what the market is saying is, you can see the market is basically saying, look, that's going to be the last rate hike. And then he's going to keep it steady for two FOMC meetings. And then after the two FOMC meetings, he's going to start reducing the rates. Is that what's actually going to happen? Especially in the wake of all the warnings that Powell is getting. He's getting warnings from a lot of people. The first warning he's getting is from the Democrats. Okay, I've got an ad blocker. I don't want to see your ads. So you have a group of senators. Hold on a second. Let me just kill this. You have a group of senators, including Elizabeth Warren, which are urging the Fed to halt rate hikes. Specifically, they're saying he is engineering a recession, and that's going to destroy jobs and crush small businesses. That's the first warning that Powell has got. The second warning that Powell has got is actually from Elon. And what Elon is saying to Powell is he's saying, look, you're using historical data, you're using inflation data, you're using unemployment data. The data that you're using is actually historical data. And what Elon is saying to Powell is he's saying, it's the difference between driving a car and looking out the rear view mirror, out the rear view window, and that's fine if the road is straight. The problem is that if the road gets bumpy or if the road gets curvy and you are like Powell and you are driving backwards, that's not really a good place to be, right? And so that is the warning that Elon is giving Powell. And this warning comes in the wake of a huge banking collapse. Initially, we had Silicon Valley Bank collapse and we had Signature Bank collapse and we had, yesterday we had FRC collapse. The first two banks, they said, okay, well, those are like small digital crypto banks, or the first three banks, Silvergate Bank 2, those are small digital crypto banks. But this time, it's becoming a little bit more difficult to blame this on crypto and small tech banks. Because if you look at the bank failures since 2008, so that's obviously the biggest bank failure we've ever had, which was Washington Mutual. And then those are all the other bank failures that we had around 2008 because of the great financial collapse of 2008. But then, if you look at the three banks that have collapsed, this actually paints quite a scary picture. Look at that. That paints a really scary picture of how big this banking collapse is. Truth is, though, it's not as bad as that. It is really bad. It's a really bad banking collapse, but it's not as bad as that because remember that there was inflation since 2008. And if you look at this on an inflation-adjusted basis, actually, it's not as big, but it is big. I mean, there is a massive banking collapse going on. Yesterday, we had PacWest Bank. Oh, God, okay, this whole thing with ad blockers. Yesterday, we had PacWest Bank shares fall 20% because now people are realizing that the banks can actually collapse and they can actually collapse in quite a big way. And you're seeing that over here. This is what the banking sector heat map looked like yesterday as FRC was handed back to, or handed on a silver platter to JP Morgan. I explained to you yesterday on yesterday's show that it was just a way to transfer a small regional bank to one of the big players and one of the big donor banks. Remember that the reason why the banks are failing is because they hold long-dated treasury bills. They went into long-dated treasury bills, 10-year treasury bills and 5-year treasury bills, because that was the only way to generate income in times when interest rates were low. So when interest rates were low and close to zero, the only way to get any kind of yield for the banks was to go and invest in 10-year treasury yields, where they'd get 1%. The problem is that as interest rates go up, the value of treasury bills actually goes down. That's how the relationship between treasury bills and interest rates work. And so if the bank bought a 10-year treasury yield at a 1% yield, and let's say they paid 990 for it, just for simplicity's sake, and interest rates go to 4% or 5%, all of a sudden that treasury yield is worth 900. And so the bank is losing money every time they raise interest rates. Now, if you look at the size of this, the global financial collapse in 2008 was 150 banks that went out of business. Today we've had 4 failures, which equate to the same amount on a non-inflation adjusted basis. We also, yesterday, saw the worst day in history for regional banks, ever. It's the worst day in history for regional banks. More than $78 billion worth of market cap was wiped off the banking sector yesterday. Let's quickly look at what it looks like today. Have the markets opened yet? The market's opening in a few seconds. We'll go back to this. I specifically kept this on to see what's happening when the markets open, but I think there's a minute to go before the markets open. Remember, the banks have $211 billion worth of unrealized losses on their books. That means that if Powell increases interest rates, this $211 billion goes up because it's more unrealized losses on these long-dated T-bills. This is a serious problem. This is a very, very, very serious problem. And that is what everybody is warning Powell about. They're saying, look, you're looking in the rearview mirror. You're looking at inflation. And even when you are looking at inflation in the rearview mirror, you're seeing that inflation is coming down. We're on the right track. Please, Powell, stop raising interest rates. Be prudent. Give it a break. You can always raise interest rates next month if you need to raise. But for now, if you raise, you are risking a big banking collapse. And the banks are all at a very critical point. Yes, they're at a very critical point on the chart, but it's not actually about the chart, because the chart is just a representation of the reality. If we break below this point in the chart, it could mean that we're breaking below critical levels where banks can't survive. And that's what 𝗕𝗏𝗿𝗃 says. He says a lot of these banks won't be around next Monday unless the Fed cuts interest rates and signals more cuts. So Powell's in a big dilemma tonight. It's going to be a big Twitter Spaces that we're hosting tonight. Make sure if you're not already subscribed to our Twitter Spaces, you go to my Twitter, you subscribe to Twitter Spaces. We will, where is it? Here. We will also be live on YouTube. Sheldon's going to be trading it. I'm going to be trading with him because I need to degen back to make my money back in the ByBit competition. By the way, in this competition, we have 1,520 participants. There are 480 spots left. Then we stop and then we play. And at the end of May, we give away the Tesla, the Rolex watch, and the $10,000 in cash. The other problem that we have is that in order for Powell to be more convinced to reduce rates or to stop increasing rates, we need unemployment to go up. We want more people to be unemployed because that's what the Fed is balancing. They're balancing inflation and they're balancing unemployment. The problem is that we just had the unemployment numbers, the non-farm payroll numbers, and the non-farm payroll numbers actually rose by 296,000 versus 148,000, which means that we've got 296,000 people getting more jobs. We estimated that 148,000 would get jobs. So it means that the economy is strong and people are actually still hiring. The economy is strong and people are still hiring. This is not good. This is not good for us because we want Powell to stop increasing interest rates. The one good thing in this whole thing is that throughout this whole thing, Bitcoin is actually performing pretty well. So it's doing what it's supposed to be doing. As people are moving away from banks, are being scared away by banks, they're taking money out of banks and they're putting money into Bitcoin. And you can see that when you look at the chart. I have a chart here. That is the chart. That's the Bitcoin price. That is the NASDAQ banking index. Look what happens as the banks start to collapse. The chart, the Bitcoin price goes up. This started with Silicon Valley Bank. This whole thing started with Silicon Valley Bank. Silicon Valley Bank triggered, that was over here, triggered this whole Bitcoin going up. And you can see it here on a slightly shorter time frame in the last couple of days. As the banks have been collapsing, Bitcoin is being used as the asset. And you can see it. Like, it's one thing for YouTubers to sit here and to tell you, oh, well, you know, Bitcoin is big. No, that's one thing. The other thing is when you actually see it playing out in the data, in the charts. So we will talk a lot more about Bitcoin, but before we talk about Bitcoin, because I've got a lot of news for you about Bitcoin, we're going to talk about PEPE, we're going to talk about Sui, we're going to talk about Solana, we're going to talk about a whole lot of other altcoins. I do want to bring in a derivatives trader, an options trader. His name is Luke. He's from Deribit, and I want him to tell us how we can use options on Deribit or on any other exchange, but specifically on Deribit, to trade this FOMC. Because we know that there's a lot of volatility in FOMCs. We're going to be trading the volatility live using futures, but maybe there is a way to trade options to capitalize on this FOMC. Luke, welcome, my friend.
Thank you, Ren. Thank you. Thanks for the invite and glad to be here.
So listen, we know that the professional traders, the big traders, the institutions, the funds, they're not trading futures. They're trading options when it comes to hedging themselves against an FOMC. Retail traders, well, they're still using futures. They still have the liquidation risk, etc. But the institutions are actually using options, right?
So on our platform, we see both. So it depends on what type of institution you're referring to. So if you look at, let's say, our client base, it consists of retail, it consists of, let's say, large institutions, which would be asset managers, hedge funds, that kind of stuff. And we have like low or high frequency trading firms. So that's really like the latency arbitrage guys. The latter group would use perpetuals. It's just not because they have a directional view, but simply because they want to arb the market as fast as possible. So we see a lot of perpetual activity, despite the fact that what you're saying, which is true, the larger firms use options to trade this kind of stuff.
In 2 minutes, tell me how today, what a good strategy would be today going into FOMC. And you can share your screen if you want, just to show us like the options. So let's share a screen, James, and let's look at how we can use options to trade our way through FOMC today.
Perfect. Thanks. And you're looking at my screen. Yes. So there's, let's say, two things you can do. One, if you're really convinced about your view, you can trade perpetuals.
Let's forget about perpetuals. Let's go into options.
Okay, good. So options, I've picked one strategy. So first of all, you need to decide which underlying you're going to use. Our key underlyings would be BTC and ETH. You would normally say BTC, I guess, because it's the typical focus of people. However, in this case, I would argue not to use it. The option prices are determined by time to expiry, so the lifetime of the option, but also volatility. So volatility is or implied volatility, the likelihood of upcoming moves priced into the market today. So if you look
the higher the volatility, the more expensive the option.
Exactly. So BTC and ETH both dropped significantly. So we're looking at rock bottom volatility levels at the moment. Typically, ETH, however, is much higher than BTC. Today, they're in line. So I can show you. So this is a chart. You see something like 50.52 for ETH, and for BTC, you see the same, which is unique. So normally, ETH is always more volatile than BTC. So in times like this, we expect some action later today. You would preferably bet on the most active or most volatile asset, especially if you're buying options. So if you're long options, if volatility goes up, you benefit. Prices go up and the market doesn't even have to move. So you gain while the market stays flat if volatility increases. So which if you want to take a bet which asset would be most preferable for this strategy in today, because they're in line, I would pick ETH. So simply because the likelihood, in my view, that ETH will rebound or volatility will increase faster than BTC, ETH is the more likely candidate.
Okay, so let's quickly look at ETH, and then what I think we should do on next time there's an FOMC meeting or a big event, we should actually do a dedicated show with you and actually do a dedicated show showing all the different types of strategies. But just maybe show us one quick strategy on ETH for today.
Yeah, so looking at ETH, you see the chart here. We're looking at 1850 approximately, right? So if you want to trade, and I've picked a strangle as a trading strategy. A strangle essentially is a long call and a long put, which I'll show you in a second. Essentially means it could go either way. So you're betting on action, one direction or the other, without actually deciding where it will go before the trade. So in order to do so, it's like a V-shaped strategy. The bottom of the V needs to be as close to the current level as possible, which we call at the money. So you shouldn't set up this position like days ahead, because the market will move and you would be unbalanced. So for example, if the market today is 1850, you set up the V shape at 1850, the market moves to 1900, you're $50 unbalanced. So preferably do this not too long before the actual announcement. So we have what we call, also this is what volatility looks like. So overall, you can see that volatility for the shorter dated products, so at the bottom you see the dates, is already elevated. People price in action. It's the entire market knows that action is coming on the short term, but not on the longer term. You see,
so people are. It just shows that people are more worried about short-term volatility, and they're kind of going, look, we'll kick the can down the road for long-term volatility. All right, quick, we've got 2 minutes left, so let's go and tell us how to implement the strategy.
Yeah, so what you'll do is you do this. You buy, in this case, a 1950 call, and you buy an 1850 put. The way you do this is simple. So you go to the screen, you select the 5th of May. I think it's better than the 4th because it gives you a little bit more time. Premium is cheap, so the difference between 4 May and the 5th of May is not that big, so I would pick the 5th of May. These are all the calls and puts, so you would select 1850 and, for example, 1800, so you would buy this one, so you see the price here, and you would buy the 1800, which is the put here. So in that case, you have 2 options. One will benefit if the market goes up. The other one will benefit if the market goes down. And that's what you see here in what we call the position builder. You see the 2 lines. If the market goes up, you gain. If the market goes down, you gain as well. And only in the horizontal line you lose, and what you lose is the premium you paid. So if you pay, let's say, $1.
This is a perfect strategy for degens, because you're kind of saying, look, if you think there's going to be volatility, you're going to make money on the upside and on the downside. The only time you're not going to make money is if nothing happens today, which if I look at past FOMCs, that's not the case.
And if nothing happens, still you could gain if implied vol goes up. So let's say throughout the day nothing has happened, but within the day there will be action. And this action, and especially you have to focus on the Powell stuff afterwards. So there's, for FOMC, there's 2 moments, right? So one is the announcement itself,
and then
where
there's a press conference.
The market will respond, and let's say the market goes up, but 30 minutes later there will be some background stories behind why the more important stuff actually, and there might actually be reversal. So if you're trading this kind of stuff, you have to be cautious that, let's say, exactly after the announcement, the market will behave in a certain direction. This doesn't mean that this is the final direction. Often there's a reversal. So what you could do, but then you really have to sit behind the screen, is if the market goes, let's say, goes up, you gain, close the winner.
Wait for the loss. Wait for the
second announcement for the background, and then with a bit of luck, which actually happened the last few times, the market reverses, so it goes the other way, and the losing leg will become profitable as well. But
so
that's
what we'll do, look, Luke, I think this is a great strategy, but I think we need much more time on this. So what we'll do is next time before an FOMC meeting, we'll do a weekend show, and on the weekend we'll actually spend an hour just going through the different possibilities and the different strategies. What do you say to that?
Yeah, it's perfect. But for now, what I'm trying to say is volatility is important, so don't underestimate that. So when you're trading options, don't only focus on the price, focus on volatility as well. So make sure you have two screens or whatever
And
way you
watch them
position your
both.
screens, but don't ignore volatility.
Got it. Luke, thank you, my friend. We'll see you later.
You're welcome. Good
All
luck.
right, so that is options. We're going to spend a whole lot more time on options. We'll do a dedicated show on options. In the meantime, I do want to talk to you about Bitcoin doing what it's supposed to be doing, and that is Bitcoin going up in price while the banking collapse is going down in price. And the more people get worried about the banks collapsing, the more Bitcoin goes up in price. So now, interestingly, what we have seen is that the price is not actually only going up, but also the price is going up on huge volume, which means that people are moving to Bitcoin to protect themselves against the banking collapse, but a lot of people are also moving towards Bitcoin. And as a result, what you're getting is this scenario now in Bitcoin, where even though we're not in a very raging bull market, you're getting something very interesting happening on Bitcoin. You're getting the banking collapse. The banking collapse is scaring people into buying Bitcoin, and therefore people are buying Bitcoin in much higher volumes. Okay, so that's what I showed you in this chart over here. But then you got another thing happening on Bitcoin, which is also interesting. You're starting to see transactions on Bitcoin going up to levels of the raging bull market in January 2021. This is kind of like where the Bitcoin transactions are, which is super interesting. You're also seeing Bitcoin transaction fees go up. And Bitcoin transaction fees going up actually isn't a bad thing. I know we think, Bitcoin fees are going up. That's not a good thing. That's not a good thing. But it actually is a good thing because it shows that the network is actually being used. And there is actually a lot of requests or a lot of demand for people to use the network. So it's not such a bad thing. And the last thing that you're seeing is that as a result of all of this, the hash rate of Bitcoin, which means that the number of miners on Bitcoin, the number of miners in working, the number of mining machines plugged in, the hash rate, which is the number of miners that secure the network, is actually now at an all-time high. Now, this is, of course, as a result of what I showed you over here, which is Bitcoin going up and people moving into Bitcoin because of the banking collapse. But it's also because of something else. It's also because of meme coins. It's also because of NFTs, or specifically the NFTs on Bitcoin, which are called ordinals. We've spoken about ordinals before. And ordinals is like a layer 2 on Bitcoin, which allows people to have NFTs on Bitcoin. And as much as the maxis don't like this because they believe that Bitcoin should be a financial network, the reality is that what they want and what they don't want doesn't really matter. This is what the transactions... Can you get rid of the comment on the screen so we can just... so you can see, there we go. You can see that the transactions on Bitcoin are actually getting, on ordinals, are getting much bigger. At the same time, you're also getting this new type of token, which is called a BRC20. It's like an ERC20, but they call it a BRC20, which is like a shitcoin on the Bitcoin network. And those transactions are also going up. So you're getting these transactions going up. You're getting Bitcoin transactions at almost bull market levels. So at January 2021 levels. And the reason why this is happening is two reasons. One, because people are flocking to Bitcoin because of the banking collapse. We saw that in this chart over here. But also because of other activity happening on the Bitcoin network. And you can say what you want about whether or not we should have memes and BRC20s on the Bitcoin network. But the reality is that the one thing that these things have done is it's driven up transaction fees. And because it's driven up transaction fees, it's also driven up the hash rate. And because it's driven up the hash rate, that makes Bitcoin, the whole network, a much safer network. Because remember, the more miners there are, the more hash rate there is on the network, the safer, the more secure the network is. So whether or not you love meme coins and ordinals and NFTs in crypto, whether or not you love this casino or hate this casino, the reality is that we should all be thankful for this casino because this casino is actually causing the Bitcoin network to be more secure. And it doesn't stop at the Bitcoin network. If you like meme coins, shitcoins, NFTs, And or if you don't like them, or if there are haters of those coins, you can also look at the Ethereum network and say, hold on a second. Do you know that since the launch of these meme coins, which are driving up the gas prices of the Ethereum network, many things are happening. The first thing is, look how deflationary ETH has become. Look at how many ETH are being burnt, and the majority of this ETH that's being burnt is being burnt because people, this is not because people are trading ETH or because people are trading ERC20 tokens. This is because people are trading meme coins. The meme coin explosion, the PEPE explosion, the 𝗕𝗏𝗿𝗏𝗕𝗏 explosion, the Bob, all these explosions have actually got a great effect not only on Bitcoin because they made the Bitcoin network more secure, but also on ETH. Because on ETH, what they're doing is they, number one, making ETH more deflationary. More ETH are being burnt because of the launch of all these, let me actually make this, I think it'll give you a little bit, if I can change the date here. 2022. Let's just see if it will work here. Look at that. That gives you a much, much, much better view. You see that? Look at the growth of the number of ETH that are burnt on a daily basis. What is this from? This is from degens increasing the ETH transactions because they're trading shitcoins, meme coins like PEPE. So for those who are against all these meme coins and stuff like that, they are actually very, very, very healthy for crypto. Let's look at all the reasons why they are so healthy for crypto. The first reason why they're so healthy is because they burn, for Bitcoin, they increase the hash rate on the network, which means that the network becomes more secure. On ETH, they make ETH deflationary. At the same time, they drive up gas fees on ETH. And if they drive up gas fees on ETH, what they're doing is they're strengthening the case and the requirement for L2s, like Arbitrum, like Optimism, like Matic. So they're creating new opportunities. The more shitcoins that are traded on ETH, the higher the price of Arbitrum. Why? Because the gas fees on ETH go up. And where do you get lower gas fees? On ETH layer 2. So they're also strengthening the case on ETH layer 2s. The next thing that's happening, and it's something that's very, very, very important. It came from a tweet by Scott Melker. But what Scott Melker said in his tweet, he said, if I could just find the tweet, it would be amazing. He said, look, do you know what got me into crypto? It was flipping shitcoins, especially Doge in 2017. That got me hooked. That's how I ended up becoming a Bitcoiner. Memes and speculation are a powerful way for bringing people in, whether you agree with them or not. And he's right. You know, sometimes we want ETH to be a financial network and we want Bitcoin to be a financial network. But the truth is, if the masses are going to come here and going to enjoy our technology for gaming and for NFTs and for trading meme coins and shitcoins in the casino, well, we should welcome them because that is the biggest use case of this technology we've created. I said it yesterday. Our technology, ETH, is a casino. ETH is the biggest casino in the world at the moment. People are flocking to ETH every single day to speculate on meme coins that they know have zero value, zero intrinsic value. What they are betting on is that more people will come and buy the tokens after them. It's why this industry has been so successful. It's what brought so many people in here. It's for people like you and I who love gambling all day long. But we can't do it in the casino because we feel guilty. So what we do is we go and do it on the Ethereum network. And when our friends and our family ask us what we're doing, instead of saying we're degen gamblers, we say we're crypto investors. It's the same thing. I mean, it really is the same thing. I said it yesterday, I'm saying it again today. Anyway, speaking of degen casinos, let's quickly look at PEPE because PEPE is now growing up. It's all very well to perform very well as a token when you're young and you're in a spot market, right? But when they start launching perpetuals, that's when the big boys come. And the big boys come with their big money and they start speculating against you. And now we're seeing a whole host of perpetuals being launched on PEPE. And that has taken the price back from where it was yesterday to 16.2 or whatever it was, all the way back down to 9.5, which is a big drop. It's like 50% almost in a day. Let's see if it reflects on the bubbles. You see, today PEPE, one of the biggest losers when it comes to bubbles, and coincidentally, one of the biggest gainers is Stacks, you see? And that is showing you that the layer 2 use case on Bitcoin actually makes this one of the biggest use cases. Can we trade PEPE derivatives on ByBit? because that's actually a good way for me to make my money back in the trading competition. By the way, while we're here on ByBit, you can see 𝗬𝗎 is trading at 1.28, so $1.28. That means it's got a higher market cap than Aptos. Aptos is on a $1 billion market cap. 𝗬𝗎 is on $1.28. And I mean, 𝗬𝗎 are chicken shits. They really are chicken shits, because they're trying to get a high listing price so that everyone will say, oh, remember the days when 𝗬𝗎 was at 120 and 130. When in reality, their price should be much lower. And let me show you how I know that. And you should know this, but we will show it to you here. Hold on a second. Where did I put all my beautiful 𝗬𝗎? I did a lot of work on 𝗬𝗎 today. Here we go. So the first thing is, look at the 𝗬𝗎 tokenomics. Okay. There's only 5% of their tokens in circulation on the launch. Less than 10%. See, it's 5%. You know what's going to happen when we get to December 2023, or just before December 2023, and you are holding 𝗬𝗎 tokens and you are part of this cliff? You're going to drown, like you go glug into token releases. Second thing is, there's a whole lot of hype. I don't see any reason why 𝗬𝗎 should be higher priced than Aptos. But the team are chicken shits. Why are they chicken shits? Because what did they do? They went and asked all the exchanges to not launch the perpetual contract when the 𝗬𝗎 tokens launched. Because they know when you got perpetuals, the degens will speculate the hell out of the price. But when there's no perpetuals, they know the only tokens in circulation are the 5% that are sitting in the diamond hands or in the VCs or whatever else. It's a scam. And I'll tell you why it's a scam. Because the last time that 𝗬𝗎 raised money, they raised money at like $1 billion valuation, more or less. Let's call it $1 billion valuation, right? And they have now launched, giving their VCs who invested at $1 billion, they can now sell some of their allocation at a $14.8 billion valuation. And who are they going to sell it to? The schmucks that don't watch Crypto Banter and weren't warned not to buy this token at $1.30. I warned you yesterday. I said, if it comes on an $8 billion market cap, I'm in. Under an $8 billion market cap, I'm in. Over a $10 to $12 billion market cap, I want to short. So I wanted to short. What do I get? Aha, the chicken shit 𝗬𝗎 team has asked the exchanges to please play nicely with the exchanges and keep the token price up artificially until such time as they can. Guys, you know what we're going to do with this token? I'll tell you what we're going to do. We're going to wait for James. We're going to wait for the perpetual, okay? So we're going to wait for the perpetual, and then we're going to see if we should short it, and I'll let you know when I'm going to short it. That is actually how I plan to claw my way out of a bad situation in this ByBit competition, because I haven't been paying attention. I haven't been paying much attention because I've been busy, but I'm going to claw my way back up. I'm minus 20%. I'm going to claw my way back up starting tonight, and I'm going to make the money on PEPE futures and on 𝗬𝗎 futures. I'm going to make back the money. The other time we're going to make back the money, and you know this and I know this, is when they launch 𝗬𝗎 in Korea, when it goes to the Korean exchange. That's when we're going to make the real money, because we know how to do that. We basically, Li Chang is the idiot that bought at $2. There's only one idiot that bought it at $2. It's Li Chang. How did you buy this at $2? Were you not in class yesterday? Were you not here yesterday when we said you don't buy this thing at a valuation of over $8 billion? I think I genuinely think that there was only one person that bought it at $2. I don't have a chart, but I think there was only one person who bought it at $2. Anyway, well done to you. It's not 𝗬𝗎 scamming. It's a VC scam. It's the Silicon Valley people who intermingle with the Silicon Valley VCs and sell them at a valuation of $1 billion, knowing that they're going to launch it artificially with 5% of the tokens in circulation, pump up the price, and let the VCs, who probably got a very small allocation of their tokens, dropped and basically saying you can sell a small portion of your valuation at 10x, and then you got like most of your money back to retail at a $10 billion valuation. And what we're going to do, just to make it easier for you, is we're going to tell the exchanges not to do perpetuals. We see you, 𝗬𝗎. Sui. You see, as I said that, Suri came on. I didn't say Suri, I said Sui. We see you, Sui. We see you. We see you. Banter sees you. We see you. Anyway, let's move on. I mean, lots of people asking whether this is the end of PEPE. Is this the death of PEPE? With the price going back down to like 8 or 9. Look, if you ask me, I think what's happened here is that the hype has finished, because you can hype up stuff with spot and limited token supply, but the minute that you got perpetuals, and BitMEX launched perpetuals, and ByBit I think have the ByBit's also launched perpetuals, then now you're playing in the big league. Now you can't manipulate the price of this. Now PEPE is going to face its real test. Can it actually become a real meme coin with real value and real use cases? Or would it just be another coin that died in the casino? That only time will tell. It's starting to grow up. It's starting to mature. I saw that it wasn't the only one that started coming down. So Dino, which we were watching yesterday, which went up to 12 cents or 11.5 cents, back down at 7.5 cents. You see? Or 0.075. So we're watching this. On Friday, get this. So what we're going to do on Friday, we're not going to have our normal banter. Someone says your monitor is about to turn off. James, why is my monitor? Can you make sure my monitor doesn't turn off here, James?
Which one?
This one. You see? James, we've got a new system here. Apparently it makes me look better, but sorry. I'm drinking Coke because I had food poisoning in the night, so I'm trying. So I'm drinking Coke because I had a bit of food poisoning last night, but I'm better now, but I'm just trying to get myself really better because I know I've got a Spaces tonight. And then tomorrow, we have another Spaces. And the reason why we have another Spaces tomorrow is because I know that we all want to learn how to invest into Cosmos. Because we're a bunch of degens. We know that Cosmos is the best technology, or is it the best technology? We know that things like Injective, we know that things like Luna were built on Cosmos. We know that Axelar is built on Cosmos. We know that Osmosis and Juno are built on Cosmos. And what we want is we want to know, how can you invest in the Cosmos ecosystem without actually buying the Atom token? Because the Atom token doesn't capture the value of the Cosmos ecosystem. So what I've done for you guys tomorrow, tomorrow, we're going to have another Spaces. In the Spaces, we're going to talk about how to invest in Cosmos. So go and sign up. It'll happen just after the show tomorrow. We're going to talk about how to invest in Cosmos. All right, cool. We're going to talk about other altcoins, but first I think we need to talk about Balaji. So Balaji, remember he took the bet that Bitcoin would go to $1 million in 90 days. Remember that? And I said to you that, no, James is unfireable. We cannot fire him. So Balaji, as I said at the time, I said to you, I think it was a publicity stunt more than anything. And I said to you that I don't think that people would actually get cross with him. And the reason why people aren't going to get cross with him is because by starting this bet and calling for Bitcoin to go to $1 million, he actually convinced a lot of people to invest in Bitcoin. And he actually came out now and he admitted, he said, look, I settled the bet early because I just knew that there was no chance that I would win this bet.
Actually settled it up front. I settled it early. $500,000 to Bitcoin Core, $500,000 to Give Directly, $500,000 to Medlock. You can check those links on chain. You can read details at balajius.com/fiat. There are just some legal details to work out, but that is now done. That's provable. You can go and check it. So that takes care of the million. That's a proof of work. Now let's talk about the trillions. So the reason that I did this is I wanted to tell you in a provable way that to send a provable signal that there was something wrong in the economy. I'm not in the habit of just burning $1 million for the sake of it. There's something wrong in the economy and the state isn't telling you about it. And things could unwind very fast. And just to give you a sense of how fast, well, it was 2 days from the collapse of SVB to the government printing $300 billion. It was 2 weeks for $500 billion to make its way out of local banks seeking safety. It was 2 months from patient zero of the coronavirus hitting the US. After weeks of denial, suddenly lockdown came in March with very little warning, so just 2 months. It was 2 quarters from when Ben Bernanke said it was going to be only a mild recession in 2008 to the global financial crisis being acknowledged as such in September 2008. And it was 2
was 2 months it took 2 months from when Ben Bernanke said there was going to be a mild recession until we had the biggest banking collapse of the biggest recession that we've had in a long time. It happened here, as you can see, in 2008 on April 10th. Ironically, I picked up this, where Powell said about a month ago that a mild recession is now likely this year. So if you, again, like this was just before the biggest banking collapse ever, and he said that we could be facing a mild recession, and now you got the same position, just this time it's Jerome Powell saying a mild recession is now likely this year, and as 𝗕𝗫𝗪 says, it happens quicker than you think. These things collapse quicker than you think. So let's keep our eyes open. Let's keep our eyes open, and regardless of, I think the one thing 𝗕𝗫𝗪 said in that thing, which I think was very smart, he said, look, if you're trying to time the market, then he's lost the bet. But if you're trying to prepare for the inevitable, which is going to happen, you know, whether it happens in a month or a year, but it's going to happen, then it's just preparation. And I think that if you're a true Bitcoin believer, then you wouldn't want Bitcoin to go to $1 million in the next 90 days, because you want more time to prepare. You want more time to be able to save and to buy and to absorb more Bitcoin. And that's basically what I think 𝗕𝗫𝗪 said. You can go listen to it. It's a 9-minute video. It's on his Twitter. Cool. Let's see what else is going on. Let's quickly just take a look at the bubbles. PEPE down 13.7, stacks up, Rocket Pool up. We'll talk about Rocket Pool tomorrow. There's some good metrics around Rocket Pool. I also said I was going to teach you guys how to mint a meme coin. We'll do that tomorrow, because I think today was a very busy show with Luke coming in here to teach us how to trade options. Pulse mainnet. A lot of people are asking Richard Hart when mainnet. It's soon. It's definitely very soon. He says Pulse mainnet will happen when it's ready, which is soon. When is soon? When it's ready. Basically, that's what he says. He's right. I respect him for not succumbing to the social pressure and actually just doing it at his pace. And I think the true test is going to be what happens if and when he launches this thing. 𝗕𝗐, you can cough now. Cough. Cough it out. Go for it. Go. Come on, cough it out.
No, I'm good.
Okay, there we go. Shame, 𝗕𝗐's sitting here and he's doing this. He's going, trying not to upset the, you know, like in the room. But you can cough, 𝗕𝗐. We all human, and you know, sometimes I cough and sometimes we all cough. Once James farted in here. It was a bad day that day. It was a bad day that day. James said more than once. He's right. In terms of the Pulse testnet, what we do know about the Pulse testnet is that it is the busiest testnet ever, 360,000 daily transactions on the Pulse testnet. Also, another thing which I saw, which is quite cool, is Justin Sun. You know, you got CZ pushing TUSD ever since BUSD has been not banned, but you know, taken on by the SEC and almost discontinued. And CZ has pushed TUSD since. What Adam Cochran, who by the way I think is the most highly strung guy in the whole of crypto, every time there's FUD, Adam, he panics and he goes hysterical. And you know, he's hysterical again. He says Justin Sun's conglomerate bought TUSD, but was still paying the initial owners to administer it. Now the keys, the private keys of TUSDs had been moved to an Asian conglomerate with ties to Justin Sun. So there is the chance that Justin Sun does now own TUSD. And you can see that there is all of a sudden a lot of action in TUSD. So just know if you're trading TUSD, who owns it. The next thing is Thorchain, Rune. One of the big darlings of the last bull run, and hasn't moved much this bull run, but what you can see is they're saying in 12 to 18 months, we will have integrated into all major wallets, L1 swaps, L1 savers, and we've got L1 lending. So they are actually making big vibes. And I think when Rune starts to move, it really starts to move. A couple other things. I did see this yesterday, that we can see that we did speak about this yesterday, that the regulators are succeeding in pushing out crypto out of the US. Both Coinbase and Gemini launched exchanges. This was fucking cool to see. Patrick Bet-David, and I'm going to be on Patrick Bet-David show, I think sometime in May. I think we're trying to organize it. He gave Tucker Carlson an offer, $100 million for 5 years, an equity stake in Valuetainment. So interesting to see. Remember, Tucker is actually still employed by Fox. He's just off air. He's employed but off air. So interesting to see what happens. Do me a favor and do Patrick a favor and just go and retweet this. so that we can try and get 𝗕𝗏𝗃𝗧𝗏𝗧's attention and see if we can help. So go to 𝗕𝗏𝗃𝗧𝗏𝗧's Twitter and help. 𝗕𝗏𝗃𝗧𝗏𝗃. TVL at an all-time high. So yes, don't forget about 𝗕𝗏𝗃. We'll actually talk about 𝗕𝗏𝗃 tomorrow on our spaces about Cosmos, because 𝗕𝗏𝗃 is part of the Cosmos ecosystem. This is very cool, but let's see what else there is happening here. Let's just see if there's anything happening in the research group. Is there anything happening in the research group? There's an article here by the Daily Telegraph that says, I'm bringing you real live news that has actually only broken in the show. It says that half of America's banks are actually insolvent. That's what it says. Sorry, it's opening it on the wrong browser. Half of America's banks are potentially insolvent. This is what Powell is actually doing. Anything else that's happened while we have gone live on our research group? No, nothing has happened. Nothing has happened on the research group. You want to just tell me yes or no in the comments whether you want to watch this 𝗕𝗏𝗕𝗏𝗃's video, which is very cool and very funny about fiat. Let me know yes or no in the comments. While you are doing that, I want to remind you of a few things. One, ByBit Trading Competition. We are only taking 2,000 people. There's 1,522. You can sign up $250 into your account. You can win a Tesla, a Rolex, or you can win $10,000. It's open to Gareth's community and our community. To enter, all you need is to sign up with a Crypto Banter link. Second thing is, if you want a second chance to win a Tesla, trade on OKX, because now all the other prizes are gone and the last prize is actually the Tesla. So yeah, don't forget about that. People are saying yes. All right, so let's play Eric's video as the bye-bye to the show. I'm reminding you that tonight we are going to be live in 2 hours. In 2 hours, we're going to be live on Twitter Spaces talking about FOMC. We are also going to be live tomorrow. We're going to also be live on YouTube a little bit later. So listen, I will see you guys again tomorrow. Until then, I want you guys to watch this. And tonight, we shall all trade well, my friends.
Next, let's discuss why fiat is bad money. Why should we care about cryptocurrencies and their attributes when we already have fiat? Fiat works pretty well, right? It's got pyramids and government buildings printed on it, so you know it's valuable. Also, it is backed by paper. Paper can be burned if you're cold in the winter. There's its intrinsic value. Try that with gold. But a skeptical observer should know that fiat money is an absolute scam and something altogether inappropriate for an ethical market-based society. As I like to say, you cannot have a free market when the most important good, money itself, is centrally planned and controlled. Fiat money and a market economy are mutually exclusive concepts. Like oil and water, they can certainly be mixed up together when force is applied, but they will naturally separate and dispel one another over time. Indeed, the average lifespan of fiat is less than 50 years. The US dollar only became fiat in 1971. That's less than the length of William Shatner's career. And as it happens, last week he announced that he has started to mine Bitcoins as well. Regardless, when examining its specific properties as money, most ways fiat is unimpressive. First, it is not scarce. It is systematically created out of thin air with no limit on supply, nor can supply even be known. Fiat is willed into existence by politicians and banks because printing money enriches the printer at the expense of the public who holds the previously printed money. The phenomenon is known as inflation or currency debasement. Fiat also struggles with durability. Your fiat will only last so long as your bank permits, and even then it slowly loses its value. Your bank can destroy your fiat with the click of a button. Ask a Cypriot. Ask an Argentinian how durable fiat is. With fiat, you are ever dependent on a third party with your wealth. Is that an attribute of money that you find attractive? Some people are comfortable with it because they trust their government, but requiring trust in politicians seems a poor foundation upon which to build a prosperous society. Finally, fiat is not nearly as portable as Bitcoin. Try to send an international wire right now. You can't because it's after 5 o'clock. How quaint is that? You can try tomorrow morning as long as it's not Sunday, because apparently God doesn't want you to use the financial system on the Sabbath. But even when successful, you'll discover it takes 3 to 5 days for your wire to arrive. You often have to physically go to the bank to do this. You have to fill out a form on paper while someone making $15 an hour takes that info and types it back into a computer. Why do people put up with this nonsense? Indeed, it is faster to strap cash to an anvil and FedEx it to Tokyo than it is to send an international wire. Do you really think that that system is going to outcompete Bitcoin in an open marketplace? And you can only send fiat if you have permission. Try to send it to a family member in Russia, you'll be censored. Want to donate to a relief effort perhaps in Venezuela? Too bad, you'll be censored. Are you sending a suspicious amount? Your payment will be blocked and you better get ready for questioning or outright confiscation. Yep, the Orwellian nanny state is alive and well, and fiat currency is one of its most insidious tentacles. Fiat has these poor monetary attributes because it is a tool and appendage of the state. It exists to serve the state, not to exist market participants. Its attributes as money are intentionally constrained and inferior so as to siphon wealth to the state through debasement and to surveil and control the behavior of the king's subjects. Remember that fiat means value by decree, not by merit.
That's quite good. Quite good. Quite good. He will be at Bitcoin Miami, by the way. If you haven't yet signed up for Bitcoin Miami, there is one more ticket left. So go and sign up. 1 or 2 more tickets. Go and sign up if you buy a ticket using our code. Remember, you got to sign up, and then when it says coupon code, you got to put in Crypto Banter. That's the only way you're going to get the discounted ticket and get a ticket to the dinner. We have 1 or 2 more spaces left for the dinner. I shall see you guys again later on our spaces in 2 hours' time. Until then, have fun and trade well, my friends.